Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 375 on May the 17th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on TransOcean Group, American Airlines, and Carnival Corporation, and we discuss three new trades on Lucid Group, the Silver Trust ETF, and the KraneShares CSI China Internet ETF. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the U.S. markets finished the week higher, mostly on news out of Washington, D.C. The Dow Jones Industrial Average gained 1,405 points, closing at 42,654 points. The S&P 500 index picked up 298 points, ending the week at 5,958 points. And now it's time for the topic of the week. The topic of the week is focus and balance. Or maybe I should say focus or balance, given my perspective on it. Focus occurs when you give a subject your undivided attention. You're dedicated only to that topic. Most of the best performers in the world attribute their success to their ability to focus on specific aspects of the game. Some are even able to attribute their success to being able to focus intensely on specific time frames, like right now. Focus is singular, based on one thing. Balance implies sharing focus on multiple things, like work and play. It is a divided focus. When I'm trading, I'm totally focused on price action. There are periods, like days, weeks, even months, where all I think about is trading. It sometimes requires my full attention, even beyond market hours. And during those periods, there is no balance. I will inevitably take a month or so to relax, slow down, maybe go ski quite a bit with my friends or travel or just spend time with my family. So even though my life may lack balance at any given moment, I achieve balance over time. I think people get so caught up in the idea of work-life balance that they avoid the level of focus that is often required for them to succeed at the levels that they really want. How about you? Does trading require your total focus? Do you measure balance in a moment or over a period of time? There are no right or wrong answers here. It's just a matter of figuring out what works best for you so that you can achieve the life that you want. So let's go ahead and get into the review of last week's trades. We're going to start off with our covered call on TransOcean Group, symbol R as in Romeo, I as in India, G as in Golf. At the time, the stock was trading for $2.61 per share. I looked at buying stock and selling the June 3 call at 10 cents, hoping for a return of 18.77% in 6 weeks. Well, shares of TransOcean Group managed to finish the week unchanged at $2.61 per share. That is super rare. The call option that we sold lost 1 penny, leaving us with a net profit of 1 penny if we were to close the trade out immediately. Now, I'm leaning towards leaving this trade on for the coming weeks and seeing how the stock performs. The same economics are still in place, but we have one less week of risk on at this point in the trade. So no adjustments are needed at this point, but always make sure you have a plan on how you're going to manage the risk inherent in this trade in the coming weeks. Next up, we have a credit spread on American Airlines, symbol A as in Alpha, A as in Alpha, L as in Lima. The stock at the time was trading for $11.11 per share. I looked at selling the June 11-10 put spread at 34 cents. That could give us a maximum possible loss of 66 cents per spread. Now, shares of American Airlines grew 54 cents, ending the week at $11.65 per share. The out-of-the-money put spread that we sold is still out of the money, and the spread has decreased in value by 13 cents, meaning you can close this trade early and make 13 cents out of the 34 cents that you hope to make in profit for the trade overall. Now, this is definitely a deviation from my standard strategy. I typically wait for the break-even point to be breached before making an adjustment on a trade like this. Now, this trade still has 5 weeks of time left until expiration. You'll have to decide if you're confident that the stock is going to head higher over the next 5 weeks, and if not, you might consider closing this one early and locking in that profit. Either way, the trade was profitable on the week, so it's a good thing. And our final trade from last week was that debit spread on Carnival Corporation, symbol C as in Charlie, C as in Charlie, L as in Lima. At the time, the stock was trading for $20.18 per share. I looked at buying the June 19-20 call spread for 65 cents. That could give us a maximum gain of 35 cents, or that's a 53.85% return in 6 weeks. Shares of Carnival grew $3.21 per share, closing at $23.39 per share on Friday. The in-the-money call spread that we bought is now even deeper in the money. And you don't have to make any adjustments as this trade looks pretty good. Of course, leaving it alone means not locking in the profit and hoping the stock remains high over the next 5 weeks. That might be a tall order, so I'm open to finding other ways to lock in a profit. I can pay 11 cents for the June 2019 put spread. That means I will have paid 76 cents for a $1 box, locking in 24 cents of profit on total cash outlay of 76 cents. Now that's a 31.5% return on my money, and I don't have to worry about the stock going up or down or sideways in the coming week. It's locked up mathematically. Of course, the stock price is well above the break-even point, so you don't need to make an adjustment on this trade. I'm just showing one of the other possible ways to lock in a guaranteed profit on a trade like this. This is the beauty of understanding options. So if you want some help understanding what I'm talking about, send me an email and I'll walk you through that trade. So that's it for the trades from last week's show. Of course, yesterday, Friday, May the 16th, was expiration date for all monthly option positions in the month of May. All new trades on today's show will use the June 20th expiration date for monthly options in June. So let's get started with the new trades on the week. We're going to start off with the covered call on Lucid Group, symbol L as in Lima, C as in Charlie, I as in India, D as in Delta. The stock ended the week at $2.84 per share. I'm looking at buying that stock and selling the June 3 call at 18 cents, hoping for a return of 11.97%, roughly 12% in 5 weeks. Now you enter this trade by buying stock for $2.84 per share and selling the June 3 call at 18 cents. This trade makes the most money if stock prices finish above $3 per share. The break-even price on this trade is $2.66 per share. In real terms, that stock purchase will require $284 and you'll collect $18 for selling the option. Next up, we have a credit spread on the Silver Trust ETF, symbol S as in Sierra, L as in Lima, V as in Victor. The stock ended the week at $29.32 per share. I'm looking at selling the June 29, 28.5 put spread at 18 cents. That could give us a maximum possible loss of 32 cents per spread. Now you enter this trade by selling the June 29 put at 66 cents and concurrently buying the June 28 half put for 48 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $29 per share. The break-even price is $28.82 per share. In real terms, you'll collect $18 per spread that you sell and have $32 at risk. And the final trade on this week is going to be a debit spread on the KraneShares CSI China Internet ETF, symbol K as in Kilo, W as in Whiskey, E as in Echo, B as in Bravo. The stock ended the week at $34.28 per share. I'm looking at buying the June 33-34 call spread for 64 cents. That could give us a maximum gain of 36 cents or a 56.25% return in 5 weeks. Now you enter this trade by buying the June 33 call for $2.18 and concurrently selling the June 34 call at $1.54. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $34 per share. Break-even price on this trade is $33.64 per share. In real terms, you'll pay $64 to enter the spread, and your maximum gain is $36 per spread. So that's it for this week's show. Thank you guys for listening. Thank you for sharing. And as always, thank you for the emails that you guys have sent out. Thank you for all the concerns over the health issues I mentioned a few weeks ago. All is well. I've been cleared by the doctors. They've got me up, moving around, walking again. If it were ski season, I'd go skiing. I'm going to go swimming or do something because it's pretty much summertime here in Texas. But all is well with me. I hope all is well with you. Thank you for the concern. Thank you for the emails. Have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.